So the great banking collapse. I know a little bit of a dramatic thumbnail. Just bear in mind that we are dealing with the YouTube algorithm, but nevertheless, this is actually potentially something very serious, and it is a Swiss bank. So Credit Suisse is how you pronounce it. And yes, I'm going to focus on TA as usual, as Dylan said over there, but they are potentially going to default on their debt, and it could have catastrophic implications. But I'm going to look at the charts mostly in this particular show, because I'm definitely not a fundamental analyst or a macroeconomist. However, I am sure that this could lead into some sort of contagion, and you can see that even in the trends over here, it is trending. And they had things like Lehman Brothers 2.0 that's trending, great financial crisis. So the problem is that this could be a contagion that could spread and create panic, and you need to ask yourself the question, is your money truly safe in the banks? And is it maybe wise to have a little bit of exposure with crypto, at least in a stable coin capacity, if we are in a downtrending market? But let's have a look at what the charts are showing, and whether the charts agree that there may be some volatility that's going to kick into the market over the course of this week. We do have important closes that have come in, which is the quarterly and the monthly close. We had last weekly close as well. And there are some very, very important things that have happened with regards to the stock market, which I'm going to touch on in just a moment's time. But first and foremost, I thought let's start off with the Heikenhachi candles over here on the weekly chart. And you can see that they are still red, but they are slowing down their aggressive downward price action, which is showing me that maybe there is some sort of a bottoming process that is trying to form. I'm now by no means calling for a bottom, but there have been some interesting things that took place over last week. I was expecting new lows to take place in the final week of September, and I did mention that to you guys multiple times, and we got that on the stock market. But surprisingly, crypto did seem to hold up and not make new lows yet. And now you need to ask yourself the question, do you think that crypto has decoupled? And if so, then is it time to start getting in? And we'll address that as well when I get onto those particular charts. But with this one over here, the weekly chart with our important MAs and EMAs, I've mentioned to you guys multiple times before, you do know that us being stuck below those 255 and 200 MAs are not a great sign. But now something interesting is starting to take place on this particular chart. Let me make that a bit bigger for you. And what that is over here is you do have the 21 EMA, which is about to cross down below the purple 200 MA. So a form of a death cross, if you want to call it that. Now, from my experience and the way that I trade these moving averages and exponential moving averages, I often find that when these crosses tend to happen, there is sometimes some sort of a rally that goes directly into those crosses. They almost act like a magnet, especially when they cross. So look out for that. If you do see any sort of a rally into the $21,500, $22,000 level, that in my opinion would be a shorting opportunity, because overall the risk definitely does continue to remain to the downside. And I haven't taken too many trades on Bitcoin over the last couple of weeks. I think I took one, which was a long, and we're looking for the short. I didn't get the ultimate short level at which I was looking for, which was around that 21,500. So stay tuned for those of you on the Discord private group. And if you're not, the link is in the description below. But for those of you out there who are in that group, if you've wondered why I haven't posted too much, it's just because everything has kind of been in no man's land for me. Look, you have to ask yourself, this level over here is pretty much a support level, the 18,000-ish level. But it's not a great level to be buying, because we have hit that level multiple times and we stuck below all those important MAs and EMAs. One area of interest that I have is the weekly bottom Bollinger Band level over here, which is currently coming in right at 15,654. And that's why I've mentioned multiple times, prepare yourself, your psychology, to rather be buying the dip. Any spike down into this level over here, you would want to be using that grid strategy that I've told you about. And that is a buying opportunity at the very least, you'll get a spike out of that zone, which would provide phenomenal profits. Let's say you bought on average from this level over here, let's say you bought around the $16,000 level because you're averaging in with a grid. A bounce up could give you anywhere around a 20% profit margin. That is huge, guys. That's a big level to be watching. Now, monthly, you can see the information that we can take from this. We got the monthly close as well as the quarterly close. It just looks like more consolidation, but because it's stuck below the important EMAs and MAs, there is risk of further downside from this level over here. So risk of a capitulation. Here you have the quarterly. So that is your quarterly picture. Same thing, a bit of a indecision candle from the previous quarter. And quarter four is historically a good quarter, but that's not to say that you can't have a capitulation event first where price spikes to the downside and then still ends up closing green. However, you need to bear in mind that the macroeconomic conditions still probably don't account for that. I know a lot of people are thinking that the Fed is going to pivot this quarter just because you have forms of quantitative easing going on in other Euro economic zones. And now they're talking about, obviously, with this potential banking collapse. By the way, with this bank, if they do default on their debt and they did collapse, I think there are systems in place now since the Lehman Brothers collapse of 2008 that hopefully they'll protect against that. But just to keep in mind, they're holding 4 times the asset under management as what the Lehman Brothers were. I think they're holding $1.5 trillion of assets under management, which is why that could definitely have some sort of contagion spread. So what about the stock market? Very, very important over here. You do have that kiss of death that has been confirmed because you do have not only a weekly but a monthly close under the previous low over there. So Friday was a very bad close for the stock market. Now, that doesn't mean that it's just going to immediately straight down capitulate. If you had to look at what happened on the previous times that this took place, first, there was about 2 to 3 months of upside or some sort of a relief rally from that. And then it rolled over and sold off. And you can see if it does hold these levels, it will start to also create a little bit of a descending triangle over here. So stuck within this area. And then you can imagine probably sometime in early quarter 1 or quarter 2 of 2023, that is when that descending triangle, if this level does hold, would reach some sort of maturity. And then you reach a potential breakdown level, which would be the ultimate capitulation of the market. So that's something important that I'm looking at. This is more higher time frame, very, very high time frame on a monthly chart. You can expect that to play out over multiple different months, possibly even quarters into next year. And this does tie in with what the DXY is showing as well, because the DXY is showing that it's probably going to tag its ultimate top level also sometime during next year, early in quarter 1, most likely. So going on a lower time frame now with the ES1, which is the S&P 500 futures. Now, we do have an important area of interest over here, which is that 200 weekly moving average. We punctured through it, but we seem to be holding above. So now the question is, do we bounce from this level? Yes, this is a somewhat key level. Do we bounce from this level and have some sort of a relief a little bit higher? I would imagine anywhere around this zone over here, and I'll put a little box in for us. So anywhere around this level over here, you may find that there is some sort of a rejection from the zone. So on the S&P 500 futures, that's going to be the 3888 level, so 3,888. Let's round up 3,890 to about the 3,950. I would expect the next lower high to form within that region, and this to be your next area that might flip into a resistance zone, what was a previous support zone. And then ultimately we're looking down towards this box over here. So keep those levels marked out. This is where I expect ultimate demand to kick in, and then the real relief rally to take place. So if that were to capitulate into this zone over the course of this week, we are already almost there. We only have about another 10% down to go, and then you could expect some sort of a bounce from that zone. So looking at the DXY on a weekly scale, this does look like there could be relief, at least, well, this will sell off to the downside, provides relief into risk on assets. So if you see some sort of a pullback from this level, you want to mark out this gray box. 108.6 is the level to watch, possibly even a little bit higher at about 109.6. So giving yourself about a 1-point range over there. That's where I expect demand to kick in for the dollar again and for that to bounce. And then relating it back to what I showed you with that kiss of death, which is on the monthly chart for the S&P 500. I would expect this to tie in with the dollar coming up towards that key 6-month level. And this is the ultimate zone that I'm watching, is 119, that 119 level. Now, let's look at what the VIX is showing us, because the VIX is also important. You have it above the 30-point risk line, and any continuation of the VIX towards the upside, anywhere within this zone, actually between this 30 and 48 zone, is a risky level for the markets, meaning that you can expect high volatility to kick in. And this is where we find those ultimate bottoms. So we're finally getting into those zones. Let's see how it reacts around this level. If the VIX starts to close another weekly candle above here, I would expect the next couple of days to weeks to kick in with volatility to the upside. And we know that's usually a tough environment for risk on assets. What about the 10-year yield? Also one of the most important charts that we've been looking at. I was interested to see that this actually closed the previous week green because it had a massive wick to the downside. At one point, it looked like it was going to be a full-on reversal and a breakdown of this diagonal support. And now you can kind of see that we're still hovering above this level over here. This 10-year yield can come all the way down to about 3.6%, bounce off this level, and it will still have this main resistance zone at 4.2 to 4.5 as the ultimate upside target. And this is an indication. Remember, anytime that you're looking at the 10-year yields, it's an indication that, you know, the system is under immense pressure and there is a liquidity crisis, which is why these banking things that are going on with them defaulting on their debts is so interesting. Especially you have the Evergrande, that wasn't so long ago. That hasn't completely played out and they haven't been bailed out as of yet. So very, very interesting environment for the markets at the moment. And overall risk continues to remain to the downside. And I'll say it again, I've said it many times before, you do not want to fade the trend in this type of environment. This is not a time to be necessarily trying to catch falling knives with your entire net worth, because I know a lot of us want to FOMO in at the low prices, but you need to think of this as a game of endurance. You want to be entering into long-term positions, I would say anywhere over the next 6 months. So the bottoming process is going to take some time. And because the markets are forward-looking, I think that by the time people start to say that quantitative easing is coming back and we're going to get bailed out, the bottom will already be in and prices will be much higher. So try and have a 6 to 12 month time horizon now as an investor when you are trying to buy the dip, and you want to do that always at key horizontal levels within the market. Quickly touching on some admin over here, guys. If you have not already signed up to the Daily Candle, I'm going to do a very neat segment today on the S&P 500. I'm going to put that all out in words for you so that you can focus on that on paper and you can actually see what I'm talking about, what the expectations are. So make sure that you sign up to the Daily Candle newsletter. The link is below. Sheldon and I drop a lot of alpha there. And then here is the link to the Discord hub. Make sure you join that. You can use any one of the links below, I think, except PrimeXBT to get into the private Discord community. So it is completely free. Just use your user ID from one of those links to join in there. Now, touching onto Bitcoin, here's our inverted chart. I want to show you how things are really, really at a pivotal decision point over here. I can probably adjust this line ever so slightly just to perfect that like that. And you can see that, again, inverted chart. So this going up means that Bitcoin price is likely going down. You got your lows, your higher lows, higher highs, higher high, higher high, another higher low over here and a higher high, and you have it forming into an ascending triangle, which we know these have measured move breakouts all the way to dangerously low levels. But it's coming right towards the end of that triangle, which means that we should get some sort of a resolution very, very soon. So if I put this over here like this and we go from a timing perspective, let me just neaten that up and make it perfect. All right, let's put it like that. So from a timing perspective, one of two things is going to happen over here. We have extremely limited time. I'm on the 3-day chart. So we got 3, 6 days. Let's push it at 9 days, maximum of 9 days. We should know the result of whether we're going to break down this trend line finally, or we're going to break above this level and make the next higher high. So remember, we've tested this zone multiple times. And again, as I mentioned to you, technically speaking, this is an area of support because the inverted chart, we'll call it resistance, but you understand what I mean. This zone has been hit multiple times, which means if you are looking to go long, you do have a very, very easy and clear invalidation level, which is pretty much below that previous swing low at about $17,600. So expect over the course of the next 9 to 10 days that this I would expect it's going to happen sooner, probably this week. But if it does stretch on, probably by next week, Wednesday, we'll have a result where this will break out of this zone over here. So keeping an eye on that. And then you want to, if it breaks to the downside, so it breaks this diagonal, the ultimate level to take out is going to be $22,500. If you start to see daily candles close above $22,500 for Bitcoin, then it's on. Then maybe things are starting to switch, and maybe the flight to safety is Bitcoin, and people are going to be leaving their fiat currencies for Bitcoin. We did see massive inflows from Great Britain as well as other parts of Europe with everything that was going on with their currencies over the last couple of weeks. But at the end of the day, don't front run this. Wait for confirmation. I really encourage you, wait for confirmation. It's the best thing you can do. Okay, looking at the other 3-day chart, which is the right way around, so the non-inverted one. Again, similar thing to what I was showing you over here. As you can see, if it does push up this week at about 21,372, that's going to meet up with your diagonal resistance, which is also holding that descending triangle, which is the same thing as this ascending one, but because inverted, it will be descending. But look, you got this level is your swing. You're going to be looking for some sort of a swing failure pattern over here. Let's put that on. This is your ultimate line in the sand. So any longs that you're going to be taking, you would need to mark off this wick over here. As soon as you even tick below that, even by $1, pretty much I would say you should invalidate any of your longs. And I think that if there is going to be any long opportunities over here, there will be another sweep down, probably at least to this wick. So just under $18,160 or at $18,159. That's pretty much the level. If I were to go long, I would look to snipe an entry off of that. So it would look something like this. Let's quickly grab this. I'll give you the exact trade setup that I'd be looking for. And I'm very, very, stingy with my entries on trades. I don't trade that often. I don't take, I'm not like, a massive high frequency trader. I'm more of a swing trader, and I'd be looking for something like this. I would only enter if it literally hit on that exact zone, and I would have my stop loss literally a tick like that, just underneath that previous wick, and I'd be looking to ride that all the way up back towards the top of the range high over there. I'd probably TP more than half of it on this diagonal, expecting it's going to reject off of that, and I'd leave like maybe 10 or 15% for the top of that. So if you do want a long trade opportunity, there it is. I'm not too excited to take this, but I'll maybe set an order for a small amount, like just $1,000. Yes, Roti, I think that's how you pronounce your name. I will post this onto Discord for you. This is the opportunity that you can take over here. So your entry would be 18,157. Your stop loss is at $17,486, and I would TP most of it at 21,372. Let's move that actually down then, and that gives you a risk to reward ratio pretty damn good still of 1 to 4.8. That's not a bad risk to reward ratio. So that is the long opportunity if you were to take that. Shorting, can't really short from here. It's not really worth it, in my opinion. You are technically right at support. So what's the point of shorting over here? Rather just prep to buy the dip. Set your spot orders within this zone over here. If you do get some massive spike up into these zones, so anywhere around here, this is what the inverse would look like. Let's make this smaller for you. And let's grab another one, a short trade. This is what your short trade would look like if you were to get some sort of a spike into this area. your invalidation is above this zone, above this move over here. And I think, you can short straight back down to the range low. Similar, better risk to reward on this one actually is a 6.24. So 1 to 6.24. But I'm impartial. I'm not really taking any trades. I'll take this. I'll attempt a little long over here with $1,000, very tiny part of my portfolio. And then I'll rather prep to buy the dip. So looking for big spot buys on my favorite altcoins within this region over here. Okay, that's a 3-day chart. What about the daily chart? Bitcoin on the daily stuck below the Gaussian channel. Ethereum also stuck below the Gaussian channel. I do want to show you one important thing over here. Okay, so 19,666 is our previous all-time high from 2017. And this is not good. Like when you look at this, you do have a series of lower highs that are forming, and you can see it's getting weaker and weaker. This area is now starting to flip into a resistance zone. So you can see that previous 2017 high area was acting as support, broke down, deviation, massive bullish candle back above, came down, retested a support, failed. Now rejection, so selling pressure into that zone, comes back down. Big selling pressure into that zone, holds it back down, tries to flip it back as support, can't, it's resistance, and that's where we're currently at. So quite a dangerous zone to be longing. That's why I said I'd only do it with a very small portion of my portfolio. So do keep that in mind with the Gaussian channel and the 2017 highs marked off. Not only that, but you do have the bear moon playing out. Funny how these things work. Very interesting moon cycles. And then you do have price stuck below all the important moving averages, which is the 9, the 21, 24, and the 34. I want to just look at only those two. Let me just take that off. There we go. There you go. So using these two have worked phenomenally. Failure to get back above is just bearish, basically. Price angled, moving averages, EMAs angled downwards, price stuck below, strong downtrend. Very little reasons to get long other than that it's holding at that 18K support. But you have to ask yourself, you can see the lower and lower highs that are forming, how it's struggling and it just keeps knocking. Guys, go look back at 2018 at the what happened when Bitcoin was around $6,000. It looks almost exactly the same. I've mentioned to you before, I'm not really the biggest fan of fractals, but it looks very, very similar. Go have a look at that. It just knocked on that same 6K level, which looks similar to this 18K level. And you rather want to wait for a break above this level. It's amazing how we can keep just lowering the level to get bullish at, which is this is what trading's about. It's about patience, and you just remain patient. Now we just need to clear this level. Before it was like 29K, then it was 25K. Now the new level to clear is 22K. We haven't lost any money. Just stay strong, stay patient. Every bounce, short it. That's how you play this game. Okay. Stuck below the 50 and 200 EMA, which is crossed down on the 4-hour chart. So also not looking good. Same thing, you got this level over here. Momentum oscillators are starting to reach to the downside, which is why I wouldn't be surprised to see a little bit of a bounce into this area. And if you do look in line with this diagonal resistance on the 4-hour, you are going to meet some trouble over here at about 20,866. But I did want to put this over here on a daily chart as well. Sorry, that's on the 8-hour chart that I'm on. On a daily chart, you can see momentum oscillators, stochastic RSIs, they're all turning back down. They have crossed down. And this is, even though we are at support, remember there is a lot of momentum that could still take this down, which means that this level could get cracked very, very soon. Whereas if you look around here, these levels, when we made those lows, stochastic RSI got oversold. We had room to bounce up. Same thing over here. We hit this level at the bottom, not completely in the super low areas, but it was still closer to the bottom than it is at the top. Look at this one. Same thing. Bottom hitting support. This had room to bounce. And then it started to roll over here like this. Look at that. And now we're near the top, coming onto support. It's probably going to break quite soon. Looking at this important chart over here with the BBWP reaching critically low levels on the 4-hour chart, signifying that there will be expansion soon. All this is essentially it's showing the Bollinger Bands. When Bollinger Bands, it's the Bollinger Band with percentiles, what it stands for. When Bollinger Bands begin to contract and squeeze in, the tighter and tighter and tighter that range becomes, and price consolidates into these triangles, like you can see this one over here. Then we got expansion, and now the same thing is happening. So I had this line over here that confirmed the bull trap of the previous week, and as long as we are below those levels, risk does remain to the downside. So guys, that brings me to the end of the stream. I think Jerome Powell's speaking today as well. They have some sort of Fed meeting that's going on, so keep that in mind. Have a look in the description below. Again, join our links over here if you do want to stay up to date. The Discord group is one of the best places to do that, because I don't have to set up a whole live stream and get a designer to make a thumbnail of me doing like things like this and stuff to go live. I could just quickly type in there if something is happening. So best place to stay in touch. Follow me on Twitter as well if you're not already. And then big shout out to our sponsor, which is PrimeXBT and OKX. Check them out. You do get sign up bonuses over there. You can get up to $7,000 using my promo code Kyledoops for PrimeXBT. Just to caution you, PrimeXBT is definitely more for those of you who are scalp traders. You know, if you're dealing with much higher forms of leverage, they run a margin cross leverage trading platform. They don't have isolated leverage, so you need to know what you're doing. But what's great about it is you can also trade things like Forex on there, as well as a couple of different stocks. So check them out. And guys, I think that's it. That brings me to the end. Let me know in the comments what you think of these videos. If there's anything else that you want me to look at, something you want me to add into the analysis, do let me know. And then make sure you give this video a like, subscribe, and then hit the bell notification. And until then, I'll see you guys all on tomorrow's video. Cheers for now.